Hi, this is JB Cycles, and today I'm looking at a possible 28-year cycle in the US markets. So I'm looking at, let's see, in blue we have the inflation adjusted S&P going back 200 years. I have the Dow Jones index not adjusted and the S&P not adjusted for inflation, and I have some inflation data here. I think it's the three-year change. Up here I have marked the 7-year cycle. So here I have put vertical lines at theoretical 28-year cycle consisting of 4 7-year cycles. So I'm starting here. We have some kind of low here, and then I'm putting these red lines spaced by 28 years. I'm focusing on the inflation adjusted cycle because that's where we really see this cycle. And in fact, you could argue this is an inflation cycle. So we had large inflation back here around the Napoleon Wars. So it's also kind of a war cycle, war and inflation. In the 1830s, I don't think that was war related, but it was a credit bubble and a huge inflation. We had the Civil War in America. Here we really don't have any inflation spike. It came a bit later. Then we had the First World War, the Second World War. We had the 1970s. We don't have any huge inflation spike at the Great Recession, financial crisis. So let's look at the market here. Here we have a clear market low in the Dow Jones and in the inflation adjusted index. Here it's kind of messy, and I'll come back to that. Here we see a low in all the indexes. At this point the low was perhaps a bit early, and here it gets messy, so we'll get back to that. In the 1970s it's also kind of messy. The market low was perhaps here, and we had a higher low around 1980. And then we have the 2009 low, and the next one out in the 30s sometime. Let's see, 2022, 29, 36. Okay, let's look at these messy points. Here we have kind of a early low, and inflation spikes, so the inflation adjusted index is kind of making an early low, but we are focused on the stock market and the stock market indexes, and we see the stock market made a very early low, and the same here. The theoretical cycle low was in the 1950s, but we see the market low was in the 1940s, and we had this special event in the 1930s. And you know, when you look at this, you think, oh, that's the major low. But in this perspective, that was what I call a collapsing cycle, and this was not a cycle low. what we see, we have some cycles that are kind of shortened. They are very bearish, and but the market low is not at the cycle low, it's earlier. Let's have a look here at this is the Shiller PE, and it shows we have been at these elevated levels that typically are at the cycle high, and the tech bubble was very high, and again now we are very high, and I have made a trend channel on the inflation adjusted S&P, and we see we are at the top of the channel, very overbought. So I'm not going to go deeply into analysis on this. I'm just going to show you my opinion, and that's that we are possibly in a similar situation to the 1850s and the 1940s. You could possibly see a larger cycle here if we name this cycle 1, 2, 3 bearish, 1, 2, 3 bearish, 1, 2, 3 bearish. So let's look at how this cycle behaves, this possible bearish cycle. Here I have drawn a rough pattern of this cycle, and we see the market low is actually here. And if we go to this one, it started back here, but if we put it at the theoretical start point, you see these two shapes are similar, just that in the 1930s we had this collapsing pattern, and now we are here. We haven't seen this collapsing pattern as the 1930s, but it may look more like the 1850s. So if this repeats, we could see the market low around 2027. That would be the stock market low, and we would have an inflation adjusted low a bit later, but in the market that would be a higher low. And if we look at this inflation, we see we also have some mid-cycle inflation spikes. We have one here mid-cycle, something here mid-cycle, there we have a mid-cycle, barely a little bit down here mid-cycle, here kind of a mid-cycle inflation spike. I can't see anything here. We had a bit early there and a late here, but no clear mid-cycle spike. Here it came a bit early. That was around the Gulf War, Kuwait, Iraq, and now we are at this possible mid-cycle inflation spike. And so this mid-cycle inflation spike could be, call it a bearish inflation for the markets, and then we could see later in the cycle a bigger inflation spike that could be a kind of bullish for the markets. Yeah. So I may dive deeper into this on a later point, but I'm curious to see if my expectation here will be correct. If so, we could have a deep correction going into 2027, which may be the market low for this cycle. Okay, see you on the next one.